Hi folks, and welcome back to this video series where we are covering various technical indicators. In this particular video, we will be talking about a very versatile yet very underused technical indicator known as the Ichimoku Cloud. This indicator Ichimoku Cloud comprises of 5 different elements, and all these elements derive their name from Japanese terminology. So I may be wrong in pronouncing these indicators or these element names, so kindly excuse me for the same. So as you can see on my screen, the Ichimoku indicator or the Ichimoku clouds is one of the most versatile technical indicators, yet one of the most underused one. One potential reason being that there are 5 elements and it is a little time consuming to understand and master all these 5 elements. But once understood and mastered, this will give you very good buy signals or very good sell signals. This particular indicator incorporates the high and low price for the defined look back period. Now remember, when we talk about RSI, when we talk about MACD, when we talk about moving averages, all of these indicators are based on the closing price. It never considers the high and low price for the defined look back period, whereas the Ichimoku indicator also considers the high and low price for the defined look back period, because in the Japanese philosophy of technical indicators, the high and the low price are given more importance than the close price. The high price point being the zone for supply where the sellers actually overpower the buyers, and the low price point being the zone for demand where the buyers overpower the sellers. This indicator also helps us identify which are the stocks or charts where I should focus and try to identify trading opportunities. Because whenever a stock is in a consolidation phase, this indicator can give me a view of the same. And accordingly, the indicator helps me classify price action as trending or non-trending. And finally, it also helps gauge the momentum of the price action, the momentum being the speed of the price action. So let's try to understand the various elements of the Ichimoku indicator. The first element of the Ichimoku indicator, which is known as the Tenkan line or the conversion line. So the Tenkan is calculated by taking the average of the highest high and the lowest low for the previous 9 periods, which means if you are looking at a daily chart, you are going to take the highest high for the previous 9 days, the lowest low for the previous 9 days, take an average and derive your Tenkan or the conversion line. Now coming to the interpretation of the Tenkan. If your Tenkan line is flat, it means the market is consolidating. If your Tenkan line is going up or rising, it means the market is bullish or the price action is bullish, and conversely, if your Tenkan line is falling, it means that your market is bearish or the price action is bearish. Finally, your Tenkan line also acts as support or resistance similar to moving averages, and because it is also incorporating the high and the low price points for the look back period, it is a little more reliable as compared to moving average. The second element of the Ichimoku Cloud indicator is the Kijun or the baseline. Similarly, the Kijun is calculated by taking the average of the highest high and the lowest low for 26 look back periods. In the context of a daily chart, for the preceding 26 days, what was the highest high point and what was the lowest low point? An average of these 2 points will help you calculate Kijun and draw or plot the Kijun line. Now similar to your Tenkan, your Kijun also indicates the trend. If it is a flat line, it means that the market is consolidating and there is no defined trend. In case the Kijun is going up, it indicates an uptrend, and in case the Kijun is going down, it indicates a downtrend. And similar to your moving averages, your Kijun also acts as your support or resistance. One additional advantage of the Kijun when compared to your Tenkan is that your Kijun can be taken as a definitive stop loss, which means whenever you take a trade, you can take a Kijun point as your stop loss and you can trail your stop loss accordingly, because it is taking a look back of 26 periods, which is a very reasonable period. Now you might be thinking that moving averages also give you a similar view that Tenkan or Kijun are giving you. So what is the benefit of Kijun or Tenkan over moving average? So let me explain that. As you can see on my screen here, I have taken the chart of Reliance Industries on a daily time frame and I have plotted the EMA 26 and the Kijun line, which is your 26 period look back and the average of the highest high and the lowest low. The EMA is represented by the black line and the Kijun is represented by the orange line. If you notice, the EMA is a very smooth line as compared to your Kijun, and your EMAs often get breached by the price action, but your Kijun doesn't, which means that your Kijun acts as a better support or a better stop loss when compared to your EMA. Also, if you notice, this is a period of consolidation or this is a period of correction and your Kijun is flat, which means you might not want to identify trading opportunities here, but your EMAs are still trending. So Kijun also gives you a picture of when the market is not trending or when the strength of the trend is not that high and you might want to take a pause and step aside for the market for the time being. So this is how your Kijun or Tenkan is advantageous over your exponential moving average. I hope this is clear. Now let us move to the third element of the Ichimoku indicator, which is known as the Senku A or the lead 1 indicator. So if you remember the two elements which we just covered, the Tenkan and the Kijun, if you take an average of the Tenkan and Kijun, you arrive at another plot which is known as your Senku A or the lead 1 indicator. Similar to your Tenkan and Kijun, Senku A also provides you a view of the trend in the market and whether the trend is present or not. If the Senku A is rising, it means that the market is bullish, and if your Senku A is falling, it means that your market is bearish. For example, if today is the 1st of August and assuming that every day is a trading day for me, then my Senku A line will be projected until the 26th of August, which is the 26th period projection of the Senku A line. So let's try to understand the Senku A or the lead 1 indicator in the form of a chart example. So on my screen, I have the weekly chart of Kotak Mahindra Bank, and the Senku A indicator is plotted with the green line here. So if you notice, the green line is moving similar to how the Tenkan and Kijun are moving, and this green line, that is your Senku A line, is projected 26 periods from the current period. So this is where the projection happens, and the Senku A, as we understand, is the average of the Tenkan and Kijun, which means the average of these two values is what your Senku A or the lead 1 indicator would be. I understand this can be a little overwhelming because one indicator has 5 different and distinct elements, but if you re-watch this video again and again and try to use one element at a time and keep on adding to it, you will be able to get mastery on this particular indicator. So don't be afraid, let's move on and let's continue. One may argue that how is Senku A more reliable as compared to an exponential moving average? As we understand, the Senku is derived from the Tenkan and Kijun, and both the Tenkan and Kijun takes the highest high and the lowest low for the look back period, whereas the EMA only considers the closing price. So on this particular chart, I have plotted the Senku A line and I have also plotted the 26 period exponential moving average. If you notice here, the Senku A gives you the feel that you have a rising Senku A, indicative of the fact that your price action is going to be bullish, whereas your EMA is not giving you that information. So that is where the Senku A element of the Ichimoku cloud gives you a better perspective as compared to an exponential moving average. Taking one more example further, I have the chart of GM breweries on a weekly time frame, and this is the zone where your Senku A is flat, which means the market is in a consolidation phase, and as we can see, the stock price is consolidating. Now this is the time where Senku A starts to rise, and if I look at the candle 26 periods back, which is this particular candle, I might want to identify long trading opportunities because the Senku A has suddenly started rising after a prolonged period of flatness. And as expected, the following candles gave me the answer and the stock price started going up. So this is how Senku A also gives you an indication of what the trend might look like in the near future. Moving on, let's look at the fourth element of the Ichimoku cloud, which is the Senku B or the lead to indicator. So if you remember, Tenkan was calculated as the average of the highest high and the lowest low for the preceding 9 period, and the Kijun was calculated as the average of the highest high and the lowest low for the preceding 26 periods. If you make it 52 periods and if you calculate the average of the highest high and the lowest low for the last 52 periods, that is what will give you the Senku B value or the value of the lead to indicator. Now coming to the interpretation of Senku B, it is very similar to the interpretation of Tenkan and Kijun. And also similar to your Senku A, your Senku B is also projected 26 periods in the future. A rising Senku B would mean that the market is bullish or the price action is bullish, and a falling Senku B would mean that the market is bearish or the price action is bearish. Now in this particular example that I'll now be covering, I have only plotted the Senku A and the Senku B lines, and I have consciously ignored the other two elements, because if you start looking at all 5 elements or 4 elements together, you might get confused and it might be overwhelming for you. So to keep it simple, I am keeping only 1 or 2 elements at a time so that you can gain confidence and you can grasp the concept better. So I have the chart of Kotak Mahindra Bank on a weekly time frame on my screen, and the green line represents your Senku A line and the red line represents your Senku B line. If you notice, whenever these lines are trending up, the stock is in an uptrend. Whenever these lines are flat, the stock is consolidating, and whenever these lines are trending down, the stock is in a downtrend. So the Senku lines or the lead 1 and lead 2 indicators give you a view of what the market trend looks like, whether the stock is consolidating or whether the stock is in an uptrend or a downtrend. So moving on, the zone between the Senku A and the Senku B indicator is often referred to as the Kumo cloud. The region or the area between Senku A and Senku B, and whenever your Senku A is more than Senku B, the cloud is typically colored by green, and in the opposite scenario, whenever your Senku B is more than your Senku A, the area between these two lines is covered by a red cloud. This Kumo cloud typically is used as the zone of support or resistance. If the Kumo cloud is green, it indicates a support zone, and if the Kumo cloud is red, it indicates a resistance zone. So that is where you can place your stop losses if you are participating in the trend or the price action. So this is where you can place your stop loss in the Kumo cloud region whenever you are a participant of the stock price action. So coming to the same example of Kotak Mahindra Bank on a weekly time frame, I have just enabled the Kumo cloud, and if you notice, whenever the Senku A, that is the green line, is higher than the Senku B, the cloud region is covered in green, and whenever the Senku B is higher than your Senku A, the cloud is covered in the red region. Those areas where your cloud color is changing from green to red or from red to green is often referred to as the Kumo twist, which means your green cloud is now getting converted to red cloud or vice versa. Now coming to the final element of the Ichimoku indicator, which is known as Chiku or the lagging indicator. It's very simple. You just project the current price 26 periods back on the closing basis. that is your Chiku indicator or the lagging indicator. So as you can see on my screen, Chiku or the lagging span is the current price shifted back 26 periods, which means if it is the 1st of August today and all of my days are trading days, then my closing price for 1st of August will be the Chiku value for the 5th of July, 26 periods back. In terms of interpretation of the Chiku, whenever the Chiku is above the current price, it is considered bullish, and whenever the Chiku is below the current price, it is considered bearish. It is overwhelming, is it not? 5 elements to one indicator, and all these 5 elements having different parameters. Don't worry, start looking at these one at a time, because that is how I also started my journey with this particular indicator, and slowly and steadily I increased one element at a time and tried to master this indicator. So now, as you can see on my screen, I have the chart of Monte Carlo on a daily time frame, and I have only plotted the 5th element, that is the lagging span or the Chiku. So this is your current close price, that is 829, shifted 26 periods back, and this black line is what indicates your Chiku indicator or the Chiku element of the Ichimoku indicator. So to summarize, an Ichimoku indicator is a very powerful indicator because it helps you identify periods of consolidation and also to identify when the price action is trending, be it an uptrend or be it a downtrend. Whenever the elements of the Ichimoku indicator try to overlap among themselves, that also represents a phase of consolidation. The Ichimoku indicator helps us identify the direction of the trend. If my Tenkan, Kijun, Senku A and Senku B are all going up, that means it's a bullish phase, and if these are going down, it is indicative of a bearish phase. Now, a few rules or few tips when we use the Ichimoku indicator. Bullish trend. Whenever you see that all these elements are rising, you buy on dips or you trail your stop loss on your existing long position. Second, whenever the markets are in a consolidation phase or in a sideways phase, you would see that these indicators are typically flat and they are almost always overlapping as well. That is when you wait for price action to start trending. You wait for the trend to begin and then you participate in the trend. You don't jump into taking a trade when the market is consolidating. You step aside and take a break. And finally, whenever the trend is bearish, you either sell on rise or you manage and trail your stop loss on your existing short positions. So folks, I know that this would be overwhelming and this would be a lot of information for you to imbibe just by the first view of it, but don't worry. This indicator is an underrated indicator but very powerful indicator, and when applied the right way in a higher time frame chart, you will get very meaningful insights. You should always note that more practice leads to better outcome. So you should try practicing this indicator by selecting one element of the indicator at a time. Now quickly, let's go to tv.dhan.co and try to see how we can plot this indicator. So on my screen, I have the chart of ICICI Bank on a 10-minute time frame. So let me increase it to, let's say, a daily time frame. Let me delete all the other indicators and drawings that we would have made. And if I go to this option, the indicators and strategies option, and type Ichimoku, I will get this option. And by default, if you go to the settings, it will tell you 9, which is the 9-day look back period for Tenkan or the conversion line, 26, which is the 26 period look back for the Kijun or the baseline, the leading span B or the lead to indicator, that is your Senku B having a 52 period look back, and your lagging span, that is your Chiku, which is a 26-day prior projection of the current close price. So these are your default settings, and you can change your line colors to suit your requirements or to suit your comfort by going to the style option. So this is how you can plot your Ichimoku indicator in the charting platform. So folks, Stay tuned and watch out for the next video where we cover a few more interesting topics like the pivot points and the ADX. Thank you.